Warning, Bitcoin's next explosion could start in just 24 hours. In today's show, I'll show you exactly why. Okay guys, now do this with me. Close your eyes and imagine the world's most powerful companies, Wall Street giants, and government treasuries all moving in sync, turning Bitcoin from an outsider's asset into a permanent pillar of global finance. This July, the rules are changing. Policy, capital, and technology are all converging to hand the keys of the crypto kingdom from retail speculators to the biggest institutions on earth. You're watching the moment when memes, hype, and FOMO give way to strategy, scale, and historic accumulation. Welcome to the new era of crypto, ladies and gentlemen. Today, I'm breaking down exactly what's fueling this shift. We'll map out every macro trigger, every policy bombshell, and every sector rotation happening right now, so you know how to move as the world's giants step in. This show is your July roadmap. By the end, you'll know exactly how to position yourself ahead of the next move. July opens with markets bracing for fireworks. President Trump faces a critical decision. The tariff pause is set to expire on July 9th. And he said, "I don't think I need to extend it, but I could." That single sentence holds trillions of dollars in suspense, with trade partners and Wall Street all watching like a hawk. Meanwhile, the S&P is in record territory, up over 1,200 points since April, hitting new all-time highs. While Bitcoin hovers around less than 4% off of its highs, and you guys know that we're highly correlated still, for better or worse, to Wall Street, to the stock market. And they just smash all-time highs. Bitcoin's coming for it next. The world's central banks, they're not waiting, guys. 64 rate cuts have happened on the global stage this year, the fastest surge since the pandemic. Europe, Canada, England, Switzerland, Australia, New Zealand, and more. They're all lowering rates while the US Federal Reserve stands still. Jerome Powell is like this deer in headlights while Trump is sitting there poking him with a stick. Come on, Jerome, do something, and calling him a bunch of bad names while he's at it. But there's a deeper macro issue that's about to hit center stage. Over the next 3 months, the US Treasury has to refinance over $6 trillion in maturing debt. Years of short-term borrowing at rock-bottom rates, they're coming due. But remember, today's yields are much higher than they were last time the government set the rates. Rolling that over will cost the government hundreds of billions in more annual interest. That's why President Trump is openly pressuring the Fed to slash rates by up to 2%, arguing it would save tens of billions as the Treasury tries to keep up with this massive wall of debt. Behind the scenes, his team is even exploring ways to lock in longer maturities just to buy time. And at the same time, almost no one in the mainstream media is mentioning this next part. This is crazy. The latest Trump bill has a $5 trillion increase to the US debt ceiling. This is the largest in American history. While most eyes are elsewhere, these two forces, record refinancing and a massively raised debt ceiling, are about to collide. And here's the bigger context. Every time we talk about Bitcoin cycles, we always come back to its correlation with global money supply, the global M2. And when you see headlines about trillions in new debt and record debt ceiling hike, you know what's coming next. The Fed's gonna print more money. Think about it. When governments have to roll over this much debt, when the ceiling keeps going up, it's a recipe for even more dollars, euros, and yen being printed into existence. And every single time the money printers get rolling, risk assets like Bitcoin have just one response. You guessed it. Send it higher. This is the macro fuel that lights the next stage of this cycle. Meanwhile, in the US, Congress is pushing ahead 2 landmark crypto bills, Clarity and Genius. They're being fast-tracked with President Trump's backing. Trump is now publicly supporting Bitcoin.
It's become amazing. I mean, it's the jobs that it produces. And I notice more and more you pay in Bitcoin. I mean, people are saying it takes a lot of pressure off the dollar. And it's a great thing for our country. So,
you know, it's also because his bags are packed. The beautiful thing about Bitcoin is that once you buy into it, you will promote it to the next people. The biggest network effect probably in the history, especially when it comes down to money and finance. July is full of catalysts, and any single announcement could set the tone for months to come. Think back to about 6 months ago. Retail traders were on top of the world. Meme coins exploded. Platforms like Pump Fund saw more than $3 billion in weekly volume. But this cycle's hype has cooled. Today, Pump Fund's volume is scraping 9-month lows, while meme coins search traffic is down 88% since the Trump coin launch. New platforms like Jupiter Studio, a Pump Fund competitor, are launching into a very different market. But a new power is rising. MicroStrategy now wields $51 billion in Bitcoin that may never and likely ever come back to the market, right? Saylor said he's going to die with his Bitcoin. US corporates are targeting massive new allocations, while businesses from every single continent are looking to replicate Saylor's playbook. ETF inflows and government reserve programs are creating a persistent global buy wall. Brian Armstrong announced that Coinbase itself is accumulating Bitcoin weekly for its corporate treasury. About time, Brian, about time. I mean, they've had Bitcoin on the balance sheet for a long time anyway, but now he's publicly endorsing it. Every institutional move adds another brick to the foundation of Bitcoin's corporate era. And the Bitcoin for corporations narrative is well underway. And let me tell you guys, I've been in this space for almost 13 years, and we used to talk about for years the day that ETFs will come, that institutions will start buying, that governments will start buying, and it's here. It's actually here. And so for you guys watching who think maybe you're late to the game because you didn't get in Bitcoin at 10,000 or 20,000 or 30,000, whatever, you're not. Right? I had to wait 13 years for this to actually happen. And you guys are coming in. If you're new, or if you've been here for a while, great. But if you're new, I just want to let you know that you're not late, right? I think that Bitcoin has another 100x in it over the next 10 to 15 years. Yeah. $10 million, I don't think is outside of the realm of possibility. That's 100x from where it's at today. And that's life-changing money. So Bitcoin is the hardest asset. And this is why I always encourage you guys to stack sats, accumulate Bitcoin, no matter how exciting this meme coin run is, or this thing or that thing, take profits into Bitcoin. Momentum is building, and the numbers prove it. Both Bitcoin and Ethereum just posted their best Q2 in 5 years. Bitcoin surged over 31%. Ethereum climbed 37%. When you look at the quarterly charts, you can see that these kind of green Q2s almost always set the stage for bullish trend shifts in the second half of the year. Capital flows are telling a new story. One of the sharpest signals to keep an eye on is realized capitalization, which measures the total value of coins based on the last price at which the coin moved. This gives a more accurate view of where real capital is entering or leaving each ecosystem, compared to traditional market cap, which simply multiplies current price by circulating supply. Ethereum's realized cap still leads the industry, reflecting its status as a dominant layer 1 for smart contracts and DeFi. However, in this cycle, the pace of new capital flowing into Ethereum has slowed dramatically. Realized cap growth for ETH stands at 67 billion this cycle, down from 170 billion in the last bull market, effectively cut in half, at least for now. I believe ETH is going to skyrocket, but anyway. Meanwhile, competitors rapidly closing the gap. Solana's realized cap is 54 billion, XRP 38 billion, BNB has climbed to 31 billion. These networks are now absorbing a much larger share of new inflows, changing the altcoin power structure. Sector performance makes this picture even clearer. Lending protocols like Aave, Syrup, and Euler, all leading the market month to date, each posting double-digit gains as capital moves toward projects with real business models, reoccurring revenue, and institutional traction. SocialFi and infrastructure tokens are holding their ground, while hype-driven narratives in modular, AI, and meme coins are fading into the background. I'll tell you from what I'm hearing from behind closed doors, behind the scenes, if you will, it seems like a lot of the big money is looking to put their money into projects and tokens that are helping to evolve traditional finance rails, like evolving TradFi, putting them on chain, not the true decentralized projects that I had hoped, and I think that eventually will catch strong bids. But at least the narrative right now seems to be predominantly on how do you take existing systems that maybe are inefficient, using blockchain to upgrade those systems and still have a big degree of centralization in that business model. That's what I see right now. And that's something that we're actually building toward as well in Paid and Commonwealth. More to come on that pretty soon. Real sticky value is being built on chain. Base chain applications have already generated over $1 billion in user paid fees since launch, with names like Aerodrome, Uniswap, Circle, and Aave leading the pack. Projects that deliver tangible yield and real economic activity are emerging as new market leaders. The lesson for July is that capital is rewarding utility, yield, and adoption. In every cycle, each new rotation reminds us that aligning with true utility, real adoption, and solid teams that know how to execute are how you secure your winning bet. Before we move on to the big supply dynamics playing out right now, let me share something that can make your own trading experience a whole lot easier. Tired of jumping through hoops, guys, just to trade? That's why I'm excited to bring you BloFin, the exchange that finally makes it simple. A channel partner, I use it myself as an American forever. No KYC, no VPNs. And yes, Americans are welcome. You get low fees, all the trading pairs you want, and instant access, just the way it should be. Deposit $100 or more in your futures account, and you'll get $10 in Bitcoin right away. They also have this really cool wheel that you guys can spin. You get all kinds of prizes, Sui, Solana, Bitcoin, all up for grabs. You can even win half of a Bitcoin for every $100 you deposit. So guys, go over there, use my link in the description below. BloFin, awesome exchange, great reputation, really growing fast. Again, make sure you use my link, and you get all kinds of cool prizes for going over there and trying it out. All right, let's get back into the story and break down why the Bitcoin supply squeeze this month could catch even the pros off guard. Supply and demand are converging in a way the market has never seen before in its entire history. Over the coming years, fewer than 500,000 new Bitcoin will enter circulation through mining. Yet the announced buy targets from public companies, ETFs, and sovereigns already far surpass that by a long shot, by a huge amount. These reoccurring institutional buys add up a wall of demand, huge allocations that may never ever see an exchange again. They got like 20-year plans in their minds, right? They're not trading short term. Every time the price dips, these buyers step in. Historical data shows that whenever this kind of persistent demand meets a fixed supply, price discovery and volatility massively accelerate. Right now, the data points to an environment where any significant drop in price is likely to be met by a wave of institutional buying. You can see this super solid wall we have around $100,000 right now in Bitcoin. And our guest last week, Joe, put it on Friday's show. If you haven't seen it, make sure that you go check it out. He said,
when you have folks like BlackRock and Fidelity and others, but ultimately BlackRock, the largest asset manager in the world, buying up their own ETF for their various funds, there are going to be levels where they just buy.
Bitcoin's ability to recover from global shocks is becoming one of its defining features. Timing always feels tricky, especially during periods of sideways price action like we've been seeing. It's been quite slow and boring, but I think we're about to break out of that. Yet, history offers a clear pattern. Since 2020, Bitcoin has delivered an average of 37% gain within 60 days after every major global shock, including the pandemic, the US regional bank crisis, and geopolitical tensions. In these moments, Bitcoin often outpaces both equities and gold in its recovery. And we talked about this just a week or two ago, right? The Israel-Iran conflict, the dip, and then the run-up. But here's where the calendar gets interesting. While most traders tune out the slow summer months, the data tells a different story. In every single post-halving year, 2013, 2017, and 2021, both July and August finished in the green, a perfect track record. Check out this. Will it play out again? No one can say for sure, but if you're betting on probabilities, and it's probably best to do that, not financial advice, but history is clear. This is not the season to fall asleep at the wheel. For those who know the playbook, the real show usually kicks off in November, when the year-end rallies have a way of catching everyone off guard by surprise. That's why the investors who stay patient, lean on the data, and keep their eyes on the long game are always best positioned when the market rally finally takes off. And that is you guys, because you guys watch this show on a regular basis. You know what's up, and we're always one step ahead of the curve. Regulatory momentum is accelerating at a pace that would have been unthinkable just a year ago. I mean, unthinkable. I moved back to the United States because of this regulatory environment. In Washington, the US Senate has laid out a timeline for passing a comprehensive crypto legislation, with the Clarity and Genius bills scheduled for introduction, markup, and final passage all before the end of September. This is going to be insane. Just wait until crypto is legal in the United States. You haven't seen anything yet. And Trump is on record endorsing both of these bills, while openly praising Bitcoin as a positive force for America's currency system. David Sachs even said it out loud and couldn't be any more clear on this. Quote, July is going to be a big month, and he is our AI and crypto czar. This regulatory clarity is removing the biggest roadblock to institutional and sovereign adoption for years. In fact, since inception, uncertainty has kept asset managers, corporates, and even governments on the sideline. Now, with clear rules on the horizon and high-level political buy-in, Capital that once hesitated is preparing to move. The effect is already being felt as waves of new money and large public announcements drive a new phase of growth. And you can see this everywhere. Robinhood, Crypto.com, Coinbase offering futures. Like, this is now happening at a really rapid pace. And this is just the beginning. We don't even have full clarity yet. Legal clarity is the final green light for capital to enter at scale. And momentum in the US is setting the tone for regulators and investors across the globe. Just look at what's happening in Asia right now. Last week, Chinese brokerage giant TF Securities saw its stock skyrocket nearly 30% after its Hong Kong arm scored a license to trade Bitcoin and crypto. Think about that for a second. Its stock pumped 30% as soon as they could get into crypto. Now Chinese mainland and Hong Kong residents are buying into this, right? They want exposure, but for the longest time, they haven't been able to do it. So any entity that is going to get exposure, they want in on. This is a clear signal to me. July could be a month when crypto's policy tailwinds turn into a full-on catalyst for the market. This new era demands a shift in mindset for anyone serious about building lasting wealth in crypto. Today's edge is no longer found in chasing lottery plays or short-term hype. The real opportunity now sits with the capital flows, corporate treasuries, and institutional frameworks that are defining Bitcoin's role in global finance. Success in this cycle means focusing on the foundation, Bitcoin as the anchor, revenue-generating projects as the engine, and select altcoins that continue to attract real adoption and liquidity. Every ETF filing, every corporate buy, and every regulatory milestone is another clue that smart money is building for the long term and a clear signal where institutions are placing their bets. If you want to front-run the next wave, track the rotations, watch where the momentum is forming, and understand that this is how a new generation of leaders will be born. If you want to stay ahead and spot these shifts the moments they happen, make sure you're subscribed and you have notifications on. You'll get every update you need right when it matters most, like this video today. And if you want even faster alpha, make sure to follow me on X as well, at Kyle_Chasse, CHASSE. That's where you'll find the breaking alpha. Because I can't make videos all the time. I wish I could. Maybe I will. We'll see. July 2025 is the turning point. The moment when capital, regulation, and technology all come together to rewrite what's possible for crypto. The biggest players in the world are building their positions right now, and the landscape is changing faster than ever. If you've made it this far, you're already ahead of the curve. Share your July strategy or your biggest questions in the comments. If you haven't yet, guys, check out the latest show with Joe for an institutional grade breakdown and market outlook by one of the sharpest minds in crypto. Staying informed and prepared is how you build an edge. Stay sharp, guys, stack sats, and I'll catch you guys on the next one. See ya.